Hello everyone, and welcome back to our channel. Today, we have some important news to share regarding the proposed amendments to the Income Tax Bill of 2023 in Uganda. These amendments have the potential to affect various aspects of taxation and could impact both individuals and businesses. So, let's dive right in and discuss the key points you need to know. Digital Services Tax for non-resident companies. One of the major proposed changes is the introduction of a 5% digital services tax on the gross revenue made by non-resident digital service providers in Uganda. This separate direct tax aims to ensure fair taxation on services provided by companies like Facebook, Zoom, and Netflix. However, the proposed 5% rate has raised concerns about its potential impact on investment in Uganda compared to neighboring countries. It's worth noting that Kenya and Tanzania already levy similar taxes on digital services but at lower rates of 1.5% and 2%, respectively. Some experts suggest that a rate of 5% may discourage investment from these companies. The government might consider revisiting the proposed rate to strike a balance between revenue generation and attracting digital service providers. Restriction on carrying forward tax losses. The income tax bill is also suggesting a restriction on carrying forward tax losses to a maximum of 5 years. This change could have implications, particularly for infrastructure-intensive businesses that often face large startup investment costs. These businesses may require more time to break even and may rely on carrying forward losses for more than 10 to 15 years. Limiting loss carry-forwards to 5 years could pose challenges to their financial stability and long-term viability. It's crucial for the government to carefully consider the impact of this proposal on various sectors and find a balance between promoting investment and ensuring tax compliance. Collective investment schemes. Let's now turn our attention to collective investment schemes, such as unit trusts, which many Ugandans have embraced as a means of saving. The proposed amendment introduces a 5% withholding tax for unit trust members with savings below Sh's 100 million and a 15% withholding tax for those with savings exceeding Sh's 100 million. While this change may have an impact on the taxation of investment scheme profits, the lower tax rate for smaller savers could help encourage a saving culture. However, it's essential for policymakers to carefully analyze the potential impact on the attractiveness of collective investment schemes and ensure that the tax rates strike the right balance between revenue generation and fostering a savings culture among Ugandans. Exemption of animal feed concentrates from VAT. Last year, there was a controversy surrounding the imposition of VAT on animal feed concentrates. The proposed VAT amendment seeks to exempt these concentrates from taxation. If passed into law, this amendment will bring much-needed relief to farmers and resolve the previous dispute between farmers and the tax authorities. This exemption recognizes the importance of supporting the agricultural sector and ensuring that farmers have access to affordable animal feed concentrates, which play a vital role in livestock production and overall food security. Waiver of interest and penalties. The Tax Procedures Bill proposes granting the Uganda Revenue Authority, URA, the power to waive interest and penalties for taxpayers who voluntarily pay outstanding principal tax by June 30, 2023, before December 31, 2023. This initiative aims to provide taxpayers an opportunity to settle their tax liabilities without additional financial burdens. Taxpayers who take advantage of this waiver can resolve their outstanding tax obligations and avoid the accumulation of interest and penalties. It's important to note that this provision applies to outstanding tax liabilities up to June 30, 2023. It's a temporary relief measure that can benefit individuals and businesses seeking to regularize their tax affairs. These are just a few of the proposed amendments outlined in the Income Tax Bill of 2023. It's essential for the public to have their voices heard by submitting comments on the various tax bills for consideration and debate by Parliament before they become law. Stay informed, stay engaged, and let's actively participate in shaping the future of taxation in Uganda. That's all for today's update. Thank you for watching, and remember to like, share, and subscribe to our channel for more informative content. Until next time, take care and stay tuned.